Electronic Payment System (EPAs) is a digital platform that enables financial transactions to be conducted electronically, eliminating the need for cash or checks. These systems are widely used in e-commerce, banking, and financial industries for secure and efficient money transfers. There are several types of electronic payment systems, including credit and debit cards like Visa, MasterCard, and American Express, e-wallets such as PayPal, Apple Pay, Google Pay, and Samsung Pay, cryptocurrency payments including Bitcoin, Ethereum, and other digital currencies, bank transfers through online banking, wire transfers, and ARC payments, mobile payment systems like UPI in India, M-Pesa in Africa, Venmo, and Cash App. Buy now, pay later options like Klarna, Afterpay, and Affirm. Point-of-sale systems used in retail stores for card payments, and electronic checks, which are digital versions of traditional paper checks. Key features of these systems include security measures like encryption, SSL, and tokenization that protect transactions, speed, as they allow for instant payments compared to traditional methods, convenience, since they are accessible via mobile apps and online platforms, global reach, enabling cross-border transactions, and cost efficiency, which reduces transaction fees and overhead costs. However, there are also challenges such as fraud and security risks from cyber threats, phishing, and fraud, regulatory compliance with standards like GDPR and PCI DSS, transaction fees that some methods involve, and technical issues that can arise from system downtimes or integration challenges. Everyday people buy or sell goods and services for money. Money becomes the major medium of exchange. Later, some payment systems were developed out of a need to facilitate the growth of commerce and economic development. The media used for transferring the value of money is very diversified, ranging from the use of simple payment instruments to the use of complex systems. Physical money is the traditional and most widely used payment instrument that consumers use in their daily lives to buy goods and services. As the volume and variety of transactions expands, the volume of money also expands. Using cash for each of large transactions is neither feasible nor practically possible. Security and transportation problems arise in cases where large amounts of cash transactions are involved. Banks would support in such cases by offering other payment methods. The cashless society has been discussed for a long time. The demise of cash and checks could not be sudden. Though old habits hardly die, people do not hesitate adapting new things. Modern payment systems may be physical or electronic, and each has its own procedures and protocols that guide the financial institution with payment mechanisms and legal systems. Standardization has allowed some of these systems to grow globally. The term electronic payment refers to a payment made from one bank account to another bank account using electronic methods, forgoing the direct intervention of bank employees. Payment system is an essential part of a company's financial operations, but it becomes complex when many different payment systems are used. Further challenges come from the continuous introduction of newer payment systems such as Paytm, UPI, Bitcoin, and various mobile payment options. As a result, there are more than 750 payment systems throughout the world. Many electronic payment systems have been developed with the advancements in the Internet technologies. Based on the value of money transactions, processing time, processing requirements, security issues, and usability, electronic payment systems are generally classified into two types. They are micro-electronic payment systems and macro-electronic payment systems. Micro-electronic payment systems are an online payment system designed to allow efficient and frequent payments of small amounts. In order to keep transaction costs very low, the communication and computational costs are minimized here. Unlike macro-electronic payments, which use expensive public key cryptography, micro-electronic payments are relaxed by using lightweight cryptographic primitives and offline payment verifications. As the security of micro-electronic payment systems is comparatively low, it can be tampered, but the cost of fraud is much higher than the possible value to be gained by fraud itself. So the security in micro-electronic payment methods is considered to be adequate. The majority of micro-electronic payment systems are designed to pay for simple goods on the internet, such as subscriptions of online games, reading journals, listening to a song, or watching a movie online. In general, the parties involved in the micro-online payments are the customer, service provider, and payment processor. The micro-electronic payment transactions can be explained in the following way. Step 1. The customer proves his authentication and the payment processor issues micropayments. Step 2. The customer pays the micropayments to the online service provider and gets the requested goods or services from them. Step 3. The service provider deposits the micropayments received from the customer to the payment processor and gets the money. Macro-electronic payment systems support payments of higher value. The security requirements are more rigorous in macro payment systems because of huge money transactions. Banks will impose a minimum transaction overhead on macro payment systems. These transactional overheads for the usage of computationally expensive cryptographic operations prevent these payment systems from being used for the payment of small amounts. Some of the popular macro online payment systems are card-based payment systems, electronic account transfer, electronic cash payment systems, mobile payment systems, and internet payment systems. Payment cards are plastic cards that enable cashless payments. They are simple embossed plastic cards that authenticate the cardholder on behalf of the card issuing company, which allows the user to make use of various financial services. More than 90% of online payments are card-based payments, and at the same time, other e-payment methods are also gaining importance nowadays. Based on the transaction settlement method, there are 3 widely used card-based payment systems: credit card-based payment systems, debit card-based payment systems, and stored value card-based payment systems. A credit card is an electronic payment system normally used for retail transactions. A credit card enables the bearer to buy goods or services from a vendor based on the cardholder's promise to the card issuer to pay back the value later with an agreed interest. Every credit card account has a purchase limit set by the issuing bank or the firm. A credit card is different from a debit card where the credit card issuer lends money to the customer instead of deducting it from the customer's bank account instantly. The term credit card was first mentioned in 1887 in the sci-fi novel Looking Backward by Edward Bellamy. The modern credit card concept was born in the USA in the 1920s when private companies began to issue cards to enable their customers to purchase goods on credit within their own premises. In February 1950, Frank McNamara and Ralph Schneider created the Diners Club card, which was made of paper cardboard. Initially, the card was accepted in only 27 restaurants and was used only by friends and acquaintances of the 2 founders, approximately 200 people. Later it was enhanced and accepted worldwide. From 1955, the card was made of plastic. The Diners Club still exists today under the name Diners Club International. Most credit cards are accepted worldwide. It is not necessary to pay physical money at the time of purchase. The customer gets an extra period to pay the purchase. Depending on the card, there is no need to pay annuity. It allows purchases over the internet in installments. Some issuers allow round up the purchase price and pay the difference in cash to make the transactions easy. The key players in the operations of credit cards include the bearer, who is the holder of the credit card account responsible for payment of invoices in full or a portion of the balance, with the rest accruing interest and carried forward. The merchant is the storekeeper or vendor who sells or provides services, receiving payment made by its customers through the credit card. The acquirer is the merchant's bank that is responsible for receiving payment on behalf of the merchant and sending authorization requests to the issuing bank through the appropriate channels. The credit card network acts as the intermediary between the banks, responsible for communicating the transaction between the acquirer and the credit card issuer. These entities operate the networks that process credit card payments worldwide and levy interchange fees, such as Visa, MasterCard, and RuPay. Finally, the issuer is the bearer's bank that issues the credit card, sets the limit of purchases, decides the approval of transactions, issues invoices for payment, charges the holders in case of default, and offers card-linked products such as insurance, additional cards, and rewards plans. Anatomy of a credit card. The publisher is the emblem of the issuing bank. The credit card number is a modern 16-digit unique identification number. The name of the cardholder is visibly embossed on the front side of the card. The EMV chip is an integrated chip in addition to the magnetic stripe to store the cardholder's information. The RFID symbol indicates that it is a contactless smart card. The expiration month and year show that the card is valid until the last day of the month printed on it. The card brand logo is the name of the credit card network company, such as Visa, MasterCard, and RuPay. The magnetic stripe is a magnetic material containing encrypted data about the cardholder and account number. The hologram is a security feature that prevents duplication. The signature is the cardholder's signature at the back of the card. The CVC or CVV, which stands for Card Verification Code or Value, is a 3-digit code usually printed to the left of the signature pane that validates the card. Apart from these mentioned, each credit card may also hold the issuer's disclaimer, address, and phone number. All payment cards, including debit card, are usually plastic cards of size 85.60 mm width times 53.98 mm height, rounded corners with a radius of 2.88 mm to 3.48 mm and thickness of 0.76 mm. These standards dimensions are maintained universally in accordance with ISO IEC 7810-ID1. The first digit of the credit card number is Major Industry Identifier, MII. It identifies the issuer category, e.g. 1. Airlines, 4. Banks. The next 5 digits uniquely identifies the issuing organization. The first 6 digits together called as Issuer Identifier Number, IIN, or Bank Identification Number, BIN. The next 9 digits are the account number. The last digit is a check digit based on the loan algorithm. Debit card is an electronic payment card where the transaction amount is deducted directly from the cardholder's bank account upon authorization. Generally, debit cards function as ATM cards and act as a substitute for cash. The way of using debit cards and credit cards is generally the same, but unlike credit cards, payments using a debit card are immediately transferred from the cardholder's designated bank account instead of them paying the money back at a later time with added interest. In the modern era, the use of debit cards has become so widespread. The debit card and credit card are identical in their physical properties. It is difficult to differentiate the two by their appearance unless they have the term credit or debit imprinted. Stored value card is a type of debit card that is preloaded with a certain amount, value, with which a payment is made. It is a card that has default monetary value on it. The card may be disposed of when the value is used or recharged to use it again. The major advantage of stored value cards is that customers don't need to have a bank account to get prepaid cards. Like a credit card or debit card, it is plastic and has a magnetic strip on its back. The magnetic strip stores the monetary value of the card. Stored value cards may not always have the cardholder's name. It is also indistinguishable from a regular credit or debit card in appearance. What looks like a credit card or debit card acts like a credit or debit card. It is used to make purchases offline and online in the same way as a credit card or debit card. There are 2 varieties for stored value cards: closed loop, single purpose, example, Chennai Metro Rail Travel Card, and open loop, multipurpose, example, Visa gift cards. In some countries, it is legal for anyone to enter or leave the country with money that is stored on cards, unlike carrying cash in high amounts, which is believed to be a form of money laundering. The modern version of card-based payment is smart cards. Smart cards, along with the regular features of any card-based payment system, hold an EMV chip. This chip is similar to the well-known SIM card in appearance, but differs in its functionalities. The advantage of smart cards is that they can provide identification, authentication, data storage, and application processing. Smart cards can be classified into contact smart cards and contactless smart cards. Electronic account transfer. Apart from card-based payment systems, there are many alternative electronic payment systems. With the advent of computers, network technologies, and electronic communications, a large number of alternative electronic payment systems have emerged. These include ECS, EFT, Real-Time Gross Settlement System, and others. These electronic payment systems are used in lieu of tendering cash in domestic and international transactions. Electronic clearing service can be defined as repeated transfer of funds from one bank account to multiple bank accounts or vice versa using computer and internet technology. The payer instructs the bank to debit from his bank account and credit it to one or more payee bank account provided amounts and dates of the payments earlier. This system provides the convenience of paperless payments. Advantages of this system are bulk payments, guaranteed payments, and no need to remember payment dates. It can be used by institutions for making payments such as disbursing of salary, pension, or dividend interest among shareholders. Similarly, individual bank customers also can make small value repetitive payments such as paying EMI of a loan, electricity bills, telephone bills, insurance premium, as well as SIP investments. ECS can be used for both credit and debit purposes, i.e. for making bulk payments or bulk collection of amounts. It is known by a number of names across countries. In India, it is called as NEFT. In the United States, they may be referred to as electronic checks or e-checks. National Electronic Funds Transfer is an electronic funds transfer system initiated by the Reserve Bank of India in November 2005. It is established and maintained by Institute for Development and Research in Banking Technology. NEFT enables a bank customer to transfer funds between any two NEFT-enabled bank accounts on a one-to-one basis. It is done via electronic messages. Unlike RTGS, fund transfers through the NEFT do not occur in real-time basis. Electronic funds transfer is the electronic transfer of money over an online network. The amount sent from the sender's bank branch is credited to the receiver's bank branch on the same day in batches. Unlike traditional processes, EFT saves the effort of sending a demand draft through post and the inherent delay in reaching the money to the receiver. Banks may charge commission for using this service. EFT is a widely used method for moving funds from one account to another in B2B business models. Real-Time Gross Settlement System is a payment system particularly used for the settlement of transactions between financial institutions, especially banks. As name indicates, RTGS transactions are processed at the real time. RTGS payments are also called as push payments that are initiated by the payer. RTGS payments are generally large value payments, i.e. high volume transactions. The development and maintenance of NEFT or RTGS systems worldwide is driven primarily by the central bank of a country. Electronic case is eCash is a currency that flows in the form of data. It converts the case value into a series of encrypted sequence numbers and uses the serial numbers to represent the market value of various currencies in reality. A cryptocurrency is a unique virtual asset designed to work as a medium of exchange using cryptographic algorithm. This algorithm secures the transactions by recording it in blockchain and controls the creation of additional units of the currency. The state of ownership of a cryptocurrency is related to individual system blocks called portfolios. Only the holder of the corresponding private key would have control over a given portfolio. The function of cryptocurrency is based on technologies such as mining, blockchain, directed acyclic graph, distributed register, ledger, etc. Electronic wallets or electronic purses allow users to make electronic transactions quickly and securely over the internet through smartphones or computers. The electronic wallet functions almost the same as a physical wallet in term that it holds our money. Electronic wallets were first recognized as a method for storing money in electronic form and became popular because it provides a convenient way for online shopping. With the development of advanced internet, the use of electronic wallets turned out as an efficient transaction tool. This is evidenced by the many e-commerce websites that use electronic wallets as a transaction tool. There are several electronic wallet services that are now widely used, e.g., PayPal, SBI Buddy. As smartphones have already usurped the place of digital cameras and voice recorders, soon it will double up as virtual debit cards. It enables sending or receiving money instantly without any plastic cards. Mobile banking is another form of net banking. The term mobile banking, also called m-banking, refers to the services provided by the bank to the customer to conduct banking transactions with the aid of mobile phones. These transactions include balance checking, account transfers, payments, purchases, etc. Transactions can be done at any time and anywhere. Some of the latest mobile banking applications even have a cash withdrawal menu. The menu will create a specific code that can be used instead of an ATM card to operate an ATM. However, this can only be done at a special ATM, an ATM with no card service. The WAP protocol installed on a mobile phone qualifies the device through an appropriate application for mobile session establishment with the bank's website. In this way, the user has the option of permanent control over the account and remote management of his own finances. Mobile banking operations can be implemented in the following ways: contacting the call center, automatic IVR telephone service, using a mobile phone via SMS, WAP technology, and using smartphone applications. Internet banking is a collective term for e-banking, online banking, virtual banking, direct banks, web banking, and remote banking. Internet banking allows customers of a financial institution to conduct various financial transactions on a secure website operated by the banking institutions. This is a very fast and convenient way of performing any banking transactions. It enables customers of a bank to conduct a wide range of financial transactions through its website. In fact, it is like a branch exclusively operating for an individual customer. The online banking system will typically connect to the core banking system operated by customers themselves, self-service banking. The advantages of internet banking are that the payments are made at the convenience of the account holder and are secured by a username and password. With internet access, it can be used from anywhere in the world and at any time. Any standard browser, such as Google Chrome, is adequate. Internet banking does not need installing any additional software. Apart from regular transactions, the Internet banking portal provides complete control over all banking demands such as available balance, transaction statements, recent transactions, bill payment, blocking a card in case of theft or loss, and information about other bank products like payment cards, deposits, loans, etc. The following are the steps to transfer funds using net banking. Step 1. Log into the net banking account using the unique username and password provided by the bank earlier. Step 2. Add the beneficiary as a payee to enable the transfer of funds. The following details, like account number, name, and IFSC about the beneficiary, are to be filled in the Add New Payee section. Step 3. Once the beneficiary is added, choose RTGS, NEFT, or IMPS as the mode of fund transfer. Step 4. Select the account to transfer money from, select the pay, enter the amount to be transferred, and add remarks if desired. Step 5. Click on Submit. Step 6. Enter the OTP received to the mobile number linked to the corresponding account to complete the transaction. Modern electronic funds transfers are secured by personal identification number, PIN, one-time password, OTP, etc. An automated clearing house processes the payment then. The Indian Financial System Code IFSC is an 11-digit alphanumeric code issued by the Reserve Bank of India to uniquely identify individual bank branches in India. It is used for domestic e-payments. SWIFT code is used for international bank transactions. UPI, or Unified Payment Interface, has revolutionized the way we handle transactions in India. Imagine sending money to a friend or paying for groceries with just a few taps on your phone. That's the magic of UPI. It's a real-time payment system that allows instant money transfers between bank accounts, making cashless transactions seamless and efficient. With UPI, you can link multiple bank accounts to a single app, making it super convenient. No more fumbling for change or waiting in long lines at ATMs. Just scan a QR code or enter a mobile number, and voila, your payment is done in seconds. What's even cooler is that UPI is available 24/7, so you can send or receive money anytime, anywhere. Plus, it's secure with features like two-factor authentication to keep your transactions safe. Whether you're splitting a bill or shopping online, UPI is changing the game, making our lives easier and more connected. Payments are the financial instruments used globally to transfer value in the form of money or its substitutes, and are constantly changing due to new technology and government regulations. Payment systems can also be divided into two types, namely the cash payment system and the non-cash payment system based on the instruments used. In the cash payment system, the instruments used are in the form of currency, such as paper money and coins, while in the non-cash payment system, the instruments used include card-based payments, checks, or electronic money. A credit card plays a major role in the electronic payment system worldwide. ECS is treated as electronic checks by the bank. The advantages and disadvantages of the physical check are also extended to ECS. In electronic clearing services, banks process the instructions from the customer to debit his account and pay another automatically without much human interference. Point of sale terminal, or POS, enables customers to make payments for the purchase of goods and services by means of credit and debit cards. To facilitate customer convenience, some banks also allow cash withdrawal using debit cards at POS terminals. The bank identification number, or BIN, is the first 6 digits of a credit card number that uniquely identify financial institutions. Brick and mortar refers to a business that has a physical store, which is the opposite of an online store. The Card Verification Code, or CVC2-CVV2, is a 3-digit code printed on the cardholder's signature panel that allows e-payments when the card is not physically accessible. A credit card network or processor is the company responsible for communicating the transaction between the acquirer and the credit card issuer, such as MasterCard, Visa, or RuPay. Double spend is a type of fraud where the same cryptocurrency is spent in more than one transaction. E-wallets are electronic purses that allow users to make electronic transactions quickly and securely. Gift cards are magnetic stripe or chip cards that hold the value of money to offer as a gift by an e-business. Internet banking is the activity of buying or selling commodities through online services or over the internet. A personal identification number, or PIN, is a static number assigned to consumers to secure card-based payments. The point of sale, or POS, is a merchant's electronic device that enables e-payments by reading the card information from EMV or magnetic strip.
I just want to take a moment to express my gratitude for your support. Every time you watch my videos, it motivates me to create even more content that you love. If you find value in what I share, please consider liking and sharing. It really helps spread the word and brings more amazing people into our community. Your engagement not only fuels my passion, but also helps me improve and explore new ideas. So, if something resonates with you, don't hesitate to hit that like button and share it with your friends. Together, we can make this channel a vibrant space for everyone. Thank you for being a part of this journey.